What is risk per trade means? It means how much risk you want to take in it. Knowing your winning rate is very important. If you don't know it, it's okay. It's very simple to calculate your winning rate. Look at this formula. Observing in multi-time frame is very important because in higher time frame candle may have structure in lower. Hi everyone. I hope everyone is fine. Welcome to our channel. This is the fifth video in this series of Hope Pips 1.0. If this is the first time you come to our channel, please watch our previous videos, then you will understand this topic well. I will leave those videos and playlist links in cards. Okay, without wasting our time, let's get into the topic. Here is the topic. Today our topic is risk management. What is risk management? Firstly, why do we have to manage risk? Is it necessary to learn risk management? When should we manage risk? What if we don't know how to manage risk? These are the questions that arise in your mind while you first listen this word for the first time. The other who knows it before may think calculating lot size is risk management. But unfortunately, that was top of the glacier. It looks easy and simple, but we can't see the bottom of it. It's a lot and heavy subject. Newbies pay lots of money for the courses. I will tell you the whole theory behind the risk management in this video. For that, I want only one thing from your side. If you think this video helpful to you at any point, please subscribe to our channel for genuine and free content. Let's get into the video without wasting time. Our topic is risk management. For simplification, I am dividing it into 4 chapters. Let's discuss one by one. The first one is risk per trade. The second one is winning rate. The third one is observing trade in MTC. MTC means multi-time frame. And finally, we will end this video with few examples. These are the 4 chapters we're gonna discuss in this video. Before going to the first chapter, I recommend you to write down what I am telling in this video. It will helpful to you in future. And simultaneously take screenshots every drawing. It will help you as reference when you're reading your notes. So here I am, your Hope Pips. Learn with me. Grow with me. Pass accounts with me. Let's discuss the first chapter, risk per trade. What is risk per trade means? It means how much risk you want to take in a trade according to your account size. That means we calculate the risk according to your account size. You may ask me, Mr. Hope, give me formula for calculating my risk. Okay, I will discuss that later. Before that, we have to decide how much risk you want to take per trade. It will depend on individual. A professional trader takes 2 to 5% per trade, but it is not recommended to beginners. So how much risk is good for beginners? Average 0.5 to 2% risk per trade is good for beginners. I think you understand my point. 0.5% to 2% risk per trade for beginners is good. Above these levels, I'm recommending you. Please don't overgreed. You may blow your account. Moving to the first question, the formula. See, this is the formula for calculating your lot size according to your risk, but it is not applicable to all risk percentage. So what we can do? Firstly, we have to calculate the max lot size. For calculating this, we have to know how much leverage your broker gave you. For example purpose, we take 1:30. After that, add your account size, then calculate your max lot size. This is for only funded traders, because these companies reduce leverage for commodities like gold, silver, etc. So for us, we can take 0.5% risk per trade because of this rule. Personally, I don't use this old method to calculate my lot size. So what I am using at beginning, I am using this AG risk calculator indicator in TradingView. I am giving this indicator link for free for all our members. This link available in our Telegram channel. Our Telegram is Hope Pips. I will give the links in comment section. From there you will direct to our Telegram group. From there you have to go to Tools section. All free tools links are available there. Use them. They all are free. But now I also not using this indicator. I am using Magic Key. This tool is epic. Very useful to quick calculating lot size according to your percentage of risk per trade and your stop loss. You can also manage the trade after execution. I don't know who developed this indicator, but they are awesome. Now I will show you how to use this. Hear this. I have virtual magic key. It's a port only in MTF and CTrader. I am using CTrader. So when you open your CTrader, you see this pop-up window. Just you have to input your risk per trade. Then click on this button for what you want to take, either sell or buy. Then adjust these lines. The red line indicates your stop loss and green line indicates your target. After setting them, click on this trade button. Trade automatically executed. Now actual plan starts from now. You can close your trade where you want to, and also you can close partials at where you want. This is how I am using this epic indicator. If you want detailed video on this indicator for how to install and use this indicator, ask in comment section. According to that, I will decide. So this is how we calculate lot size. Okay, let's move to next chapter. Winning rate. Knowing your winning rate is very important. If you don't know it, it's okay. It's very simple to calculate your winning rate. Look at this formula. You may think, is that mandatory to remember these formulas for Forex traders? My answer is absolutely not necessary. These days, so many websites and apps make it simple. We just have to enter our every trade details in those websites. They automatically calculate our winning rate. They tell your average net gain. They tell your average net loss, your maximum drawdown, average pips you gain, and so on. But I don't use them now. I created my own journal sheet in Excel because I don't want to give my valuable content to untrusted parties. There were no other reasons. So look at this. This is my journal page. In this, I enter all details of the trades I take every day. It will give you everything. Means your winning rate, your maximum drawdown, your average profit, your maximum profit like others. But in addition to, it also gives you the percentage of trades you take in every setup and percentage of trades you took in different timings. So you may ask, what can we do with them? Okay, it's confusing to you, but if you know the timings at which our setups work well, or our skills beat your emotions, all these are parameters that decide your discipline. If you want a detailed video on my Excel sheet, let me know in the comment section. I will read all the comments. According to I will make a video on how to use advanced journaling sheets. I think you understand how to calculate your winning rate and smart ways to calculate it. But the main thing is why we have to know that. Because according to your winning rate, you can adjust your risk reward ratio. Here another question came. What is the risk reward ratio? It's nothing but what you risk for a reward. Suppose you want to set your stop loss at 10 pips and your target is at 10 pips. In this case, you are risking 10 pips for 10 pips. That means it is 1:1, or your stop loss at 10 pips, but this time your target at 20 pips. In this case, your risk reward ratio is 1:2. Look at this picture. How risk reward versus winning rate decides your strategy edge. You know that every strategy have average winning rate. According to my backtesting results, our strategy has nearly 75% winning rate, and we mostly aim for 1 is to 1 risk reward ratio. That means what it shows for winning rate 75% versus 1 is to 1 risk reward ratio is. See, it shows green box. That means we are in profits. In this way, we can anticipate. So for more details, in 1 is to 1 risk reward ratio, at least greater than 50% winning rate is enough to gain profit with our strategy. Even below 50%, what bro? How can you in profits below 50%? In the chart it shows we are in loss. But you said we can make profit. Are you mad? Oh, oh, wait buddy. Here our risk management play a major role. As I said, when we lose a trade, we only lose only 70% in actual loss. That is the trick in our strategy. So according to our strategy, if you're in the profit zone, even your winning rate is 45%. Is it not awesome? Let's see how other winning rate works. If you aim for 1 is to risk reward ratio, you just have to maintain minimum 40% winning rate with your strategy. Otherwise, if your winning rate below 40% means you are in loss. Next, if you aim for 1 is to 3 risk reward ratio, you just have to maintain only minimum 30% winning rate. But here taking 1 is to 3 risk reward ratio trades is very tough job. You to be more patient in this world. So like this our winning strategy. Here is why I am telling. So grabbing 1 is to 3 risk reward ratio trades very rare. Tell me how many trades you took in this year 2024. Literally very few trades. If you ask me the same question, my answer is I only took 3 trades in this year. Those trades gave me into 4 reward. Like this. Just aim for 1 is to 1 risk reward ratio. Stress free trading. No emotions carried trades. Then ultimately you will see the profits. So this is the magic of the winning rate. I hope you understand this. How to know winning rate. If you have any other doubts, ask in comment section. I will answer all questions. Let's move to the next chapter. Observing in MTF. If you watch this video up to this, I think you might like my videos. Please subscribe to this channel for more content like this. Share this video to your trading friends. Click on bell icon for faster notification when I uploaded videos in this channel. What means MTF? It's nothing but multi-time frame. So observing in multi-time frame is very important because in higher time frame candle may have structure in lower time frame. You may miss the logic behind price movement. For example, see this photo. What you observe, price in uptrend. So higher chances for the next candle also move bullish. But what happened? Price moved downwards. Can we tell the reason why this candle moved downwards by looking at this time frame? Absolutely not. So what we have to do? Just observe in lower time frame. There may be a structure break happen. So let's move to lower time frame. See this the 30 minutes time frame bullish candle by combining these two 15-minute candles. What happened next? A small bearish 15-minute candle formed. What is the probability that the next candle move bearish? Low, right. But look at this. This candle breaks the previous candle low. What that means? Up to this candle price action makes higher highs and lower lows. But this 15-minute candle broke the trend by forming a lower low. So what can we expect next candle? Bearish, right? As we anticipate the next candle moves bearish. So this is the reason why this candle moved bearish in 30 minutes time frame. Any know about this setup? If anyone, then write in comment section. So like this smaller time frame helps us to read charts efficiently. Practice more. Okay, let's move to next chapter. Examples. In this chapter, we're gonna discuss 3 examples. With these examples, I will show you how to manage a trade. Let's see the first example. This is chart of gold. Firstly, what we do when see a chart, drawing support and resistance. So let me draw support and resistance here. Here, this is the support area. Then draw a support line. And this is the resistance area. Then draw a resistance. And see left side clean range. So draw a line here for understandable. If this candle breaks previous candle low, I will take sell entry because as per impulse entry rule, it satisfies all rules. See candle breaks previous candle low, so I take sell entry and my stop loss at previous candle high. As per candle rule, high probability of next candle moving bearish. Right. So let's see what will happen as we expect candle move bearish. Oh, wow. This candle moving against us. We don't see any indication for upward. Then why this candle breaks previous candle high? To that we have to go to lower time frame. This is 15 minutes time frame. See this candle breaks the previous candle high. So I want to close 50% at this movement. See again price move upwards. I close total position after this candle breaks previous candle low. Why I do this? Because when in lower time frame structure breaks, then in higher time frame price will move opposite direction. Look at this trade, I lose only $10 instead of $20. This is called risk management. Let's move to the next example. This is again 30 minutes chart of gold. Here is the support zone. Let's draw support here and draw a resistance here. If next candle breaks previous candle low, I will take impulse entry. Let's form top wick first. See candle closing time. So wait for close. Yes, I closed. If next candle breaks this candle low, I will take breakout entry. Here I entered after this candle breaks previous candle low with stop loss at previous candle high. Let's move to lower time frame. Lower time frame also in downtrend. Look at this. This candle breaks previous candle high. So in lower time frame downtrend breaks. So I am closing 50% of my position. Let runners run. Wow, look at our runners done a good job. So I will close 50% in remaining. So here I close all my position. Let's see the results. See, finally we got $21 profit. So let's move to next example. This is our support zone. Let's draw support. And this is our resistance zone. If this candle breaks this support, I will take sell. Or it breaks this resistance, I will take buy. Let's see what will happen. See, it breaks support. As per our plan, I take sell entry here. Then let's move to lower time frame. I am closing here 50% of my position because price moved halfway towards our stop loss. See here a dozy candle formed. If this candle breaks previous candle high, I will close another 50%. So it breaks. So I am closing another 50%. See price moving in our detection. My target is here. I will close total position at here. Look, price reached our target area. So I am closing total position here. Let's see results. Look, I lose only $13 and our runners gave $23. Finally, we are in profits. Like this, I manage my trades every day. Like this, I cut my losses small. And ultimately, at the end of the week, I remain profit. So I think you understand how risk management works, how it protects your capital, and give a push to build $1 million account. Thank you. This is the end of the video.